So, guys, in this episode, we are going to be talking about advanced market structure. So, we are going to address the issue of market structure, and it's really one of the most important topics because I understand you guys, you could be having different strategies that you use, which is okay. But I believe at least most of the strategies that I've been able to learn, they all agree with what we call market structure. You get so because even if you use supply and demand, for those that use BTMM, for those that use ICT, all these strategies they are explaining a market structure. So we are going to be really looking at something really important here. So let's dive into the content. I'm going to start with some simple illustration just over here. Just watch out here. This is a simple illustration. I'm not going to waste a lot of time here. Now, in this episode, I know in the topic of market structure, it's going to be divided into about 3 or 4 episodes because it's a bit lengthy. But today we are going to be looking at swing versus internal structure, swing structure and internal structure. So now we are going to, I will start by explaining what we call a swing structure. So I have some simple illustration here. We can see that the market was making highs and higher highs when it was breaking basically upwards, as you can see just over there. So if at all it's breaking upwards, we can say that we're in a bullish trend. So when we get a market structure shift here, we got a market structure shift. So it is possible that in most cases, in many times, you'll find that the market here keeps on making these short-term moves like that as they go down. You get? So now when the market comes, anyways, this point of origin that we've seen where the market was making highs and higher highs like that, we call it a swing point. You get this point just over here. This is our swing point. You get that is our swing point. So which means if at all the market is coming back, it is returning to our swing structure. You get our swing structure. So now, in most cases, it is possible that the market will reach that point. It will reach this point. For instance, it's coming like that. It doesn't matter the time frame. It is possible that it will reach that point and then it starts to buy. You get so that is our swing structure. So now, when the market breaks below, you get that this is a break of what we call a swing structure. You get so now this is a very very strong signal that the market is trending downwards. So now I've explained what a swing structure is. Now I'm going to explain what we call internal structure. So you see these points that we previously breaking up. You get this is the extreme, as you can see. That is our extreme. Now these ones become the internal. This one becomes the internal structures, internal points. You get, and now these ones they act as our points of interest in most cases. You get, so now when we get a swing structure being broken here, which is a break of market structure, you get sorry, when we break structure there, you get, so we get a a break of market structure there. So now these are internal structures. You get these internal structures, they act as our order blocks or they act as our POIs. You get, so now these points, the most recent point that takes out that breaks this swing structure acts they act as our POIs. As for the case of a bearish market, they act as our supply zones, and we know this is where we normally get the impulse moves from. You get, this is where we get the impulse moves from. So if at all it's a higher time frame and you know we've broken swing structure, you can take a swing pullback. You get, you can take entries on a swing pullback, and now you return here and then we break. So now, yes, it may continue doing a lot of cycle, like making lots of cycles, but here I just wanted to make a short cycle just for illustration here. We are going to go on the charts and you'll see that. So now we continue to break structure. This is a break of structure. You get, this is also a break of structure, and now you can see that here the market makes a a market structure shift. We get a structure shift. So I addressed that in the previous video. So now it is also possible here that before we broke this, if at all you go on a lower time frame or on that very time frame, there could have been some kind of move here before we broke up. You get before we broke up. So now we can also highlight it as our POI for taking entries. You get now we break structure here. This is a market structure shift. You get so now sometimes time frame coordination also matters. Yes, this is a very long strategy. You get this is a very long topic, but now on the basic side of it, we start to target. If at all we get a shift here, in most cases now we start to, which means these short term structures. You get will be targeting will be our POIs for targeting up. You get so now what do we target? We target this weak structure, this structure here. You get so now this one becomes weak structure. You get before by the way, there is a point that I didn't explain at first. Now when we break a swing structure, these internal points they become what we call strong structure, where we are going to be trading from as we go down. You get as the market pulls back to these points, they become strong structure. When we get a market structure shift, in most cases now, when we become bullish, these are structures that have been formed, short-term structures that are here, or internal structures, they become strong structures as we target weak structure. You get, and now for those that use do SMC or ICT, this one become liquidity. Sometimes this one becomes the trend line liquidity that we target. You get, and now what do we target? We target what we call swing structure. You get, we target what we call swing structure. So as the market breaks up, here we could have, if at all we can have a pullback, and now we come and target that. So it is possible that the market will reach there and it will start to sell. You get, so it's like a cycle. It's like a cycle. So let's hop over on the charts and then maybe we shall be understanding it better. So now, this is what I was trying to explain. So let me zoom out just a little bit here. So if at all we look at this point here, this is what I was trying to let's get this example here. So we can see here the market started here and then it was moving up like that. You get, it's moving, making those kinds of moves. So which means it's creating highs and higher highs like that. So you can see that the market, so which means where is our swing structure? Our swing structure is this point here. That's our let me, yes, this is our swing structure. So this one becomes the internal structure. So you can see that we got a market structure shift just over here. Sometimes when there are news, when there are many things that we have to put into context. So we got a market structure shift. Anyways, let me not over punch in a lot of concepts. So we got a market structure shift over there. If I can highlight it. By the sometimes a market structure shift is not a guarantee that we are going to take out a swing structure. You get, it's not a guarantee, but nonetheless, we got a shift just over there, and now we came and broke swing structure. So now, in most cases, the market returns back. You get, so given that here we didn't have something like this. In most cases, it's going to be there. Maybe if at all we had gotten a pullback just over here before we broke. You get, so I don't want us to be rigid. You get, if at all we had a pullback there, it is most likely that now the market would have come and then it would react to that zone, and then let's say it drops. You get, let's say it pops back to that zone and then it sells again. You get, but then nonetheless we didn't have that POI, but we broke structure there. We broke a swing structure, so we can mark this as our break of structure. So now this is where I talked about breaker order blocks in the previous in the previous episode. So I believe now you guys are starting to understand why I'm bringing certain videos first. You get, so even this market structure, advanced market structure video, it's going to lead up to some content. So for those that are really interested in learning, please you can subscribe and feel free to share also. So now if at all this is our zone, you get, this is our zone, we are on a high time frame, let's say the H1, we can refine this zone here and then we take entries. So now we are not only tagged to waiting to seeing, let's say, something like this. If at all we don't have a POI like that, at least we have a break order block. So at times you can have you can have an area with lots of confluences, but at least now we've seen what a swing structure is. So now it's also a sign that the market is proceeding down. You get, like, we are in a strong, let's say, downward momentum or strong bullish momentum. So we also have another swing structure just over here. As you can see, we have this kind of move. We have this kind of move. You get, and now the market came and broke. You get, so we have this point. Given that we don't have another pullback before we break the swing structure, so we can consider the point of origin. You get, we can consider this point of origin. So sometimes we can highlight this whole zone. For starters, you can highlight this zone and then you go on lower time frames. If at all, how can it get invalidated? You get, how does it get invalidated? This is what normally happens. What normally happens, if at all the market, let's say, returns back, and that is your sell zone. Yes, we have these candle wicks that are popping out. Those are stop hands. So now, if at all sometimes we get something like this, the market comes, it closes above, you'll see that this will be a market structure shift. You get, that would be a market structure shift, and then possibly the market would target this origin there, that swing, this swing point that you're seeing over here. But then we have to be as flexible as we can. So let's say you highlighted this zone here, you get, as our supply zone. Let me So we have our zone there, and now you can see that we got the market gave us some nice market structure shift. You get, so, and I told you guys that the market structure shift concept is going to help you so much if at all you've aligned it with other confluences. You get, if at all you've aligned it with other confluences. So we got our market structure shift that you're seeing just over there. And now when we get a market structure shift, we can see that we expect this kind of thing. We know, let's say the market has been bullish and then it turns like that. We come back looking for what? Looking for order blocks. You get, and now we have our breaker. Hold up. I think now you're starting to pick up. Some people have been asking me. We have this breaker, the whole of this range, and now also this point here. So if at all you got in there, that is your entry, then you drop. What are you targeting? We are targeting weak structure. You get these points here, these swing points like that. You get, so we target it. That is our target. The market came, broke it. That is a break of market structure. And now what do we expect? A return. So now, what is the short-term structure or internal structure that led to the break of structure there? It is just over here. We can see that we have a number of transitions. We have that one that broke. So now you can see that the market came and then we got, this is a shift. You get, you get that was a shift. But then before, early enough, we can say that if I told you when on lower time frames, we could also consider this one here. You get, but then this is for advanced concepts. You get, and most advanced concepts we study them during mentorship. So now, anyways, the market came, we created uh, an area of demand here. So here it was really a bit tricky, but now at least on high time frames, if I told you had gotten the if I told you we do an H4 analysis, this was a very, very good POI that you can see over here. So maybe we shall be also seeing that those concepts later on, later in other videos as we go on. So here we created we have, anyways, we have a market structure shift here, and then we have broken above here. So as the market comes back, we can refine this zone. You get, let's say, to the M5, you get, and we can see that still on M5 we will see a market structure shift, the market shifting upwards. You get, so now but on this very time frame we have this shift over here. You get, so now our bias changes now. You get, now we've been trading off of short-term structures as strong structures. You get, as strong structures that will facilitate our let's say runs. Let's say this is what I was saying. We have this, and now you get, so many times, if at all we break this swing structure, you get, when we break that swing structure, as you can see there, normally the market reacts, it comes back to these internal structures, you get. So which means they act as our strong structures that where we take entries to target lower, you get, to target lower. So now when the market shifts, you get, those ones, they become our target. This is what we call, normally what we call trend line liquidity. These are the points that we've been reacting off of. Now, as the market shifts up, you get, as the market shifts up, we start to we start to target them. So we have that. This was a very, very, very big area of demand, you get. You have your entry there. Where's your stop loss? Your stop loss is just down below there. And now we want to look for long position. For instance, you've taken your entry there, and what are we targeting? We are targeting these points here. Let me show you. So that is our target. We extend, and now our stop loss just below here, you get. So that's what I'm trying to illustrate to you. And now we got tagged in there, and now you take your profit just over there. And now the cycle continues like that. The cycle continues. We have that break of structure, but internally we had gotten a market structure shift. We have this point here, you get. So the market normally comes back, uh, it comes back to target more, you get, to target more. So there are number of POIs, most also less so on higher time frames. You may ask yourself, how would I get this buy over here? We've shifted on higher time frame. This is a very, very good breaker order block. This is zone for buying. You come, we test it, and then we go. Then still we got another market structure shift. As you can see, we got a shift. This was our market structure shift. Let me show you. We get a market structure shift, and now we get. Let me first highlight. There is something really important here. That is a market structure shift. This is our change of character. Get. For me, I normally differentiate them. And now, yes, this is really it depends. By the way, these concepts, they are, it depends on how you use to marking up like your charts, and it depends on what a market structure shift means to you and what a change of character means to you. You get, for me, this would be my change of character, and it's because of what it communicates to me. You get. So now, yes, we've broken a swing structure, you get, which can be, someone can call a break of market structure, you get. So I can call it a change of character or a break of market structure. But given that this is for me, a change of character signals the first swing structure that is broken, which means now the next are going to be just breaks of structure, you get. But now let me first let's say this one is going to be just a break of structure. Now let me just explain that one, and then we shall end the video there. So now the market came, they bought, and now it sold. If at all we can look a little bit, I told you we would buy. If at all we got a shift, you get, we got a shift, and then this would have been our take profit point, because this was the initial shift, where this was the origin, you get. So it would be our target. So if at all you wanted to take an aggressive entry, you could take that one, but the most sure one would be that one, and maybe you would take a re-entry in this zone here. Let me hope I'm not confusing. Let's say you've taken your profit there, you get, because we were targeting where we've started from, you get. That's what we would be targeting. So now let me anyways, this is what I was explaining. So we got another shift here, you get. So now we know we start to ask ourselves, or we mark out which is the most recent the most recent internal structures, or we look at the internal structures that have led to this break of structure or this change of character for the initial move anyways, you get. So which is this range over here, you get. So we start to target these ones for our entries, targeting lower, you get. So if I told this would be my entry, you get, let's say this zone is my entry. Now, what am I targeting? We are targeting this weak structure, you get. And now for me, we would target, first of all, this one here, you get. So for someone, others could go for the extreme, but for me, I would be targeting this. So in most cases, this for me, my strategies mostly, they are so good for those that are scalping. You get, you want to get in and get out. You get. So I think that's the first step for swing traders. Like it is the same. These are the same concepts that we apply, but sometimes the psychology and the emotions are different, you get. So uh, I wouldn't advise for someone to start. Anyways, for me, I didn't start with swing trading. I would start by scalping, though later on, as you get used, you can start to hold trades for so long, you get. So that's how the structure keeps on changing. That's how. But we look at a number of POIs, the number of concepts that really come in. It's not always just too predictable, you get. It's not always just too predictable, but then it is it is possible to be predicted, you get. So that is it for the introduction on market structure. So even in the next episode, we shall be talking about market structure, but then we shall be introducing some new concepts. And then the most important thing is to be able to define your trading range. For me, that is so important, like to define your targets that you're aiming to hit, you get. So for now, wish you the best.